Is offline the new online? Amazon posts small record profits but warns its COVID boost is fading as people return to shopping in person. And the airline agony continues. British Airways owner IAG loses €2 billion in the first half of this year as COVID travel restrictions continue. And welcome to World Business Report. I'm Victoria Fritz. We're going to start with Amazon, the e-commerce giant that's been one of the big winners during the pandemic as people around the world were forced to shop online and, to be fair, couldn't do much else. But is that boom going to come to an end? Amazon made sales of a vast $113 billion in the 3 months to June. But that was less than Wall Street was actually expecting, and it's warned of a further slowdown in the coming months. Samira Hussain reports from New York.
Amazon is the online shopping titan. But what happens when consumers who have spent most of the last year and a half stuck inside are finally allowed to go out shopping in actual physical stores? Well, they do it. And that was certainly reflected in Amazon's quarterly earnings report. Now, the company had a blockbuster year in 2020 as the pandemic forced many to shop online. But not only did Amazon miss investor expectations for revenue in the last 3 months of this year, its forward guidance, so what the company is expecting for the next 3 months, is also lower. Now, to be clear, Amazon's revenue was still up 27%, and this is the third consecutive quarter in which the company made $100 billion in revenue. But it was still disappointing to Wall Street. Now, another thorn in Amazon's side is the continuing investigations by federal regulators here in the U.S., who are looking at Amazon's selling practices of its own branded goods and, of course, its recent acquisition of the storied Hollywood studio, MGM Studios.
Samira Hussain in New York for us there. Now, one of Europe's biggest airline groups has predictably reported more losses in the first half of this year. IAG, who are they? Well, you'll probably know their brands, British Airways, Iberia, Aer Lingus, to name a few, but they lost more than €2 billion after tax in the 6 months to the end of June. The companies continued, of course, to struggle with the travel restrictions, and crucially, the normally lucrative routes to the United States and back are still being restricted. Let's speak now to John Strickland, who's the aviation consultant at JLS Consulting. John, we did get some help, didn't we, for BA this week due to the double vaccination announcement for US travellers to the UK. Too little, too late, do you think?
It's certainly a bit of a positive news. It's not by any means sufficient to put the airline back in a robust financial health and to go forward to a normal world, but it was a good step. And they've just actually announced in the last few minutes that within a matter of hours of hearing that news that US citizens could come to the UK without quarantine on the double vaccinated basis, they saw bookings go up by 95% out of the US. So that really indicates that people do want to travel, but that market is really one of the most important for British Airways and also for Aer Lingus. I was also interested to see they said this morning that the other parts of the group, Iberia and Vueling, also benefited because unlike the North Atlantic, Latin America has been strong, as has the Spanish domestic market.
Yeah, looking for some bright spots in this. Although these losses are pretty eye-watering, aren't they? They are roughly half of the same losses they made at the same period last year. So, I mean, do you think this is a bit of a turning point for the airline industry?
It's a bit difficult to say that. There's just so much uncertainty around, not least that caused by governments themselves. I mean, we're all still wrestling with the evolution of the virus, but government policy or lack of consistency has been a challenge for IAG and all airlines. And IAG has been particularly exposed because, of course, we know that the UK government's had a kind of a green travel list, and there's been cities and countries on and off that list on a very erratic and irregular basis. It's been very hard for airlines to plan. And most importantly, that, of course, has affected confidence. But hopefully, as we continue to see a vaccine rollout, not just in Europe, but around the world, we will progressively improve. But of course, summer is well on its way to being over for an airline like IAG, and winter is always tough. And this is the second summer when they've had very little revenue on the long-haul market. So a long way to go yet to get through. They have improved their liquidity. They've got over 10 billion euros available. They've gone out and sought more sources of that. So they're better placed. But when I say that, it's all in relative terms.
Yeah, absolutely. They are still burning through 200 million euros a week in cash. They're not issuing any profits guidance, are they, for 2021? Do you think investors are going to dump this stock?
I don't think so. IAG has always been well regarded in the industry and amongst its peers. We're hearing Air France KLM results today and shortly Lufthansa. Those airlines are doing relatively less well. Of course, they're also different in that they've had a large amount of government financial support, which IAG has not had to do. That, I think, from an investor point of view, would be seen positively. They're standing on their own 2 feet. They're looking for commercial sources of liquidity, and they have complete management freedom to take difficult commercial decisions, many of which they actually took last year, particularly British Airways, with a lot of pain in terms of their relationship with unions and the need, sadly, of course, to lose jobs. But it was very much necessary. And I think that reflects in the improving performance today, which ultimately protects the long-term well-being of the business, its employees, and, of course, its customers.
OK, John Strickland from JLS Consulting, thank you very much for your time today. The world already produces enough food to feed everyone on the planet, yet millions go hungry. Why? Well, food waste. The amount of good food going in the bin every year is enough to fill 23 million 40-ton trucks. Bumper to bumper, enough to circle the earth 7 times. And all of that food costs money. In fact, the average household could save almost $1,000 a year by just buying the food that they actually ate. Now, an army of waste warriors is taking action to help us tackle the problem.
My career in the food industry, and that's where I realized how big food waste is. Today, we basically throw away 1/3 of the food we produce on the planet, and I just thought that's just too crazy. So we need to find a solution for everybody to actually do something about food waste and really make a difference. And that's why we created Too Good To Go, where we connect stores that might have leftovers at the end of the day to consumers, people like you and me, who can come and collect at the end of the day a surprise bag filled with foods that could have ended up in the bin otherwise. Today, the fact that people don't understand the difference between expiry dates is responsible in Europe alone for 20% of the food wasted. Best before and use by actually mean 2 different things. So use by is really about your health, whereas best before is only a quality factor. So we've been working with many food manufacturers, food retailers, to explain better the difference between the 2 dates on the products. It's really about creating that mass movement where everyone changes their habits, and together we can have a huge impact.
And viewers on BBC World News can see more about how the world is tackling food waste on Talking Business with Aaron Heselhurst this weekend. The time's on your screen, the first airing 23:30 GMT on Saturday. Let's look at some other news, shall we? We're going to start in France. The French economy grew by higher than expected, or more than expected, 0.9% in the 3 months from April to June. Hotels and restaurants are particularly well, but the economy is still more than 3% smaller than it was before the pandemic. COVID restrictions have been easing since May as the government tries to keep the Eurozone's second biggest economy open. This week, the French Parliament controversially expanded the use of COVID passports for entry into bars and restaurants, as well as long-distance travel. The French car maker Renault says it expects the global shortage of computer chips will mean it makes 200,000 fewer cars this year than it did the year before. That's twice the previous estimate. However, rising sales of new vehicles and a turnaround plan which involves job cuts and making less models means it's made a profit of just over 350 million euros in the first half of this year. That compares to a loss of 7 billion euros in the same period the year before. The UK's biggest dairy company has told the BBC it failed to make 25% of its deliveries to supermarkets last weekend because of a lack of lorry drivers. The company's managing director said 600 stores did not receive deliveries. The haulage industry estimates that there are 60,000 unfilled jobs for drivers across the country because of Brexit and COVID restrictions. Now, I'm going to prove to you gas is exciting. Gas is very exciting because this is what's going on at the moment in the markets. Natural gas prices in Europe and the UK have soared to some of the highest levels on record, and they're threatening to raise the costs for households and businesses. Global supplies are very, very tight at the moment. The UK prices have risen to their highest level since 2005 and a record for a summer, and European prices have hit €40 per megawatt hour for the first time ever. Told you it was exciting. I'll see you soon.